Now let's focus on Lloyd's Metals and Energy. Well, it's been a big gain in the past 1 year, but it's corrected from the recent peak. I caught up with the company's managing director, Mr. Rajesh Gupta, from the Motilal Oswal conclave and asked him on his volume targets for the next couple of years and also how he plans to fund the sizable capex he has laid out. Let's hear what he had to say.
First quarter results were a little better than I believe the next quarter, maybe a little down. International markets have now stabilized, so I think the Indian market will also stabilize. And I believe that the quarter 3 would be better than quarter 2. Quarter 2 may be a little down than quarter 1.
All right.
Exact realization is difficult to define.
Okay, all right. So quarter 1 was good. Quarter 2 will be a little bit of a downer. But quarter 3 onwards, you're saying things will improve from here on. Great, we got that. Tell us a sense on volumes then.
Yes.
On iron ore, you were talking about 10 million tons. So that appears on the cards going by what you have done in the first quarter. So do you maintain that? And also DRI, in the first quarter, you did around 67,000 tons. Do you think you'll hit around 350,000 tons for the year?
So iron ore, 10 million tons is our EC capacity and we would be able to achieve that. We have been front-ended in our manufacturing of iron ore because quarter 2 in the monsoons we know that we hit a rough patch, but we hope to be equally after that, so we should touch 10 million tons. Quantity-wise on DRI, it was a very good quarter in terms of quantity. No, we will not achieve 350,000 tons, but definitely our capacity utilization will be much better than last year. I think we should touch around 270, 280,000 tons this year.
Okay. The big trigger though, Mr. Gupta, for you is about your reserves. So could you tell us what is the extractable iron ore reserves as of now? You know, you all were looking at it, I think it was nearly around 150, 200 million odd. But tell us, what is the updated number and is there a further potential out there?
Okay. Well, first is I forgot to add one point on quantity. We will be going forward and looking at increasing the EC for next year, at least for next year, up to 12 million tons. In terms of extractable reserves, we have done a preliminary survey with the help of Tata Steel, and the reserves have come to around 180 million tons preliminary of hematite and around 550 million tons preliminary of BHQ. These are preliminary figures which are awaiting final studies. The drilling program has been completed, and so the BHQ would entail a beneficiation, which we are going, getting the technical clearances and thought processes on the technology clear on that. Our teams are visiting various reference plants to ensure that we do a good job of the beneficiation. This extent of beneficiation would probably be the first time in India, and that's how the reserves, the actual usable reserves, would go up very substantially over the year. The final exploration report would come out in the next 2-3 months. There's a bit of delay on that.
Okay, all right, 2-3 months. You'll know your exact extractable reserves then. Got that. Mr. Gupta, the other point that you made about the 12 million tons. So in FY25, you're saying the iron ore sales volume will be at 12 million tons once all clearances come about?
Around, once all the clearances come about, and these clearances are easier than getting, because it's, I won't say automatic, but since we are a 5-star mine, the reserves are, the clearances are a little easier to get, and we would be going through that process right now, and by FY25, the total quantity would be 12 million tons.
Okay, all right. So that's heartening to hear then, because just a short while back, it was in low single digits, moving to 10 and then 12 million tons in FY25. We got that.
Yeah.
Also, if you could tell us, your Capex plan entails that you're moving in forward integration, right? So if you could tell us, what is the total Capex plan that you've lined up? Will it be funded via debt, internal accruals, or is there some equity raising plans?
As of now, the plans are around 4,500 crore rupees investment in one pellet plant of 4 million tons and one steel plant of 500,000 tons, including a backup capacity of DRI and power in the steel. This will be around 4,500 crore rupees total investment. This we hope to be funded. This will be over a period of 2 to 3 years. 2 years, you would say. So by 26 year ended, 26 it would be all under commissioning, and we hope to fund this all through our internal accruals.
Oh, that will be a tall ask then, but you seem fairly
Definitely
confident as well.
Yes, that is a tall ask. Yeah, definitely, because we are very confident we won't be raising any debt. So we have to achieve those figures.
What about, will you be looking at equity at some point of time?
At this point of time, there is no such thinking process.
Okay, all right. I'm looking at your realizations as well as your margins. For the first quarter, your blended margins were around that 27% approximately. And on an EBITDA per ton basis, it was roughly around 1,550 rupees. But when you last joined us, you told us you're looking at some cost-saving measures, and that could increase the EBITDA per ton from here on. Give and take everything, the cost-saving measures, the realizations, the volumes, what can your EBITDA per ton steady state look like for Lloyd Metal?
So I think going forward, 1,500 to 1,800 would be the, given the scenario of the iron ore market, like any other commodity, goes ups and down. So I would say this was amongst the bottommost figures, and we have seen international pricing, like I said, rise up again once it touches $105. So we hope that that will be the case going forward. So it would be in that range, plus not minus, hopefully.
Okay, all right, 15 to 1,800 rupees. Final question, Mr. Gupta, before we let you go. Sunflag Iron, they have a big stake in the company. Have you heard from them what they want to do with that stake? And also, is there any plan to merge both these two entities? Since they have such a big equity holding, do you think it makes sense at some point of time, or is that completely not on the cards?
No, that is not on the card at all. They are an independent company. We're an independent company. That's not on the card at all. And no, we haven't heard about them, from them, what they wish to do with their holding.
If they want to sell, will you look to buy?
Since it's not on the board, so why talk about totally imaginary things?
Well, that was a good chat that I had with Mr. Gupta. The stock has been a big outperformer. The big highlight is that this year they'll do 10 million tons in terms of iron ore sales. Next year it moves to around 12 million tons odd, and they're continuing with their forward integration plan, which they've laid out a Capex of 4,500 crores odd. For the time being, though, we'll slip into a short break. Coming up next, Anuj Singhal will be joining in for Trade Setup. We'll also get you the top stocks of the day, and also we'll get in picks from our technical and F&O experts. You don't go anywhere.